All right, so you sent us a whole stack of documents on RBL Bank's latest financials,
Yeah.
their unaudited standalone and consolidated results,
Uh-huh.
the press release, the investor presentation, even the auditor's review report.
Wow.
Looks like you're really trying to get a handle on their Q3 performance.
Yeah, definitely.
And honestly, that's smart, especially with everything going on in the financial markets these days. It's good to be informed.
Absolutely. And that these reports can be pretty dense,
Yeah,
but that's what we're here for,
right.
to break it all down and see what's really going on with RBL Bank.
Exactly. We'll cut through all that financial jargon and pull out those insights that'll make you the most informed person at your next meeting,
Right.
or maybe even just give you some interesting trivia for your next cocktail party.
Exactly.
So expert speaker, ready to dive in.
Let's do it.
Okay, so the headline news is that RBL Bank's net profit for Q3FY25 is down to 33 crore.
Okay.
That's a pretty steep drop compared to the 233 crore they pulled in during the same period last year. On the surface, that's a bit of a gut punch, right?
It certainly catches your attention.
Yeah.
The bank is pointing to a large additional provision of 414 crore they've set aside for their joint liability group, or JLG loans, as the main reason for the profit dip.
And I think it's helpful to clarify what we mean by provisions, because that term can be a bit confusing.
Yeah, definitely.
Essentially, it's money the bank sets aside to cover potential losses on loans that might go bad. So this big provision for JLG loans is basically them saying, hey, we're anticipating some of these loans might not be repaid.
Exactly. And it makes you wonder, what does this signal about the overall health of those JLG loans and, by extension, RBL Bank's future profitability?
Right.
Is this a one-time blip, or is it a sign of deeper trouble brewing, something to keep in mind as we go through the rest of these financials?
Okay, noted, but here's where it gets interesting. Despite this profit dip, RBL Bank is still talking up their retail loan growth and healthy capital position. What do you make of that? Are they just putting on a brave face, or is there substance behind this optimism?
To answer that, we need to look at the details of their loan portfolio, and you're right, they are painting a picture of two distinct segments within their lending business.
Right, they've got this tale of two cities situation going on.
Yeah.
On one hand, their retail advances loans to individuals are up a strong 19% year-on-year, reaching 55,199 crore.
Okay.
And within retail, the real star performer seems to be their secured advances, which grew a whopping 38%.
Wow.
That's where they're really placing their bets for the future, it seems.
It's a classic strategy shifting towards more secure lending options, like home loans, which tend to be less risky than, say, unsecured personal loans.
Yeah.
That makes sense, especially considering the current economic climate.
But then there's the other side of the story, the wholesale advances, which are loans to larger businesses.
Right.
Those are only up 5% to euro 35,213 crore. Not exactly the same celebratory vibe there.
True wholesale banking can be inherently riskier, so the slower growth might reflect a more cautious approach from RBL.
Okay.
It's also worth considering whether this segment is simply not experiencing the same demand as the consumer lending market.
And speaking of strong foundation, what about their deposit base? That's crucial for any bank, right? Because without deposits, they can't really make loans.
Absolutely. RBL's overall deposits grew by a decent 15% year-on-year, hitting a total of 1,006,753 crore. What's interesting, though, is that within that growth, they saw a 20% jump in what are called granular deposits.
Okay.
These are deposits under 3 crore.
Now, why would that particular detail catch your eye?
Well, it's a good indicator of a broader customer base.
Okay.
It suggests they're attracting a wider range of depositors, not just relying on a few big institutional players. That diversification can make their deposit base more stable, which is good news for their overall financial health.
So it's not just about how much money is coming in, but also where it's coming from.
Right.
Diversity seems to be the name of the game here.
Exactly.
Okay, so we've got the loans, we've got the deposits. Let's talk about a specific area of lending that I know a lot of people are curious about, their credit card business.
Sure.
The numbers tell an interesting story here. New accounts and total spending are up, but we're also seeing a shift in the types of transactions happening on those cards, with more activity in purchase finance and personal loans.
Interesting.
What do you make of that?
It could be a sign of changing consumer behavior.
Okay.
Are people becoming more comfortable with installment-based purchases or using their credit cards to access personal loans for various needs? Maybe it's a reflection of economic pressures, or maybe it's just a shift in how people manage their finances.
Yeah.
Whatever the reason, it's a trend worth noting, especially for RBL Bank.
Right, because it could mean A couple of things for the bank. On the one hand, offering these financing options can be a good way for them to generate more interest income.
Mm-hmm.
But on the other hand, it also comes with some inherent risks.
Absolutely. It makes you wonder if they're properly equipped to manage this shift. Are they accurately assessing the creditworthiness of borrowers who are taking on more debt through these options?
Right.
Are they effectively managing the potential for increased defaults?
Okay, so it seems like there's a bit of a balancing act going on here.
Yeah.
More potential revenue, but also more potential risk.
Exactly. And that brings us back to that elephant in the room, the JLG portfolio, and that massive additional provision of 414 crore, which seems to be the main driver behind the profit dip.
Right.
So let's unpack that a bit, shall we?
Yes. What exactly is going on with this JLG portfolio?
Well, for those who might not be familiar, the JLG portfolio has historically been a significant part of RBL Bank's business.
Okay.
It focuses on lending to small, informal groups, often women in rural areas.
Uh-huh.
These loans are typically used for income-generating activities or small business ventures.
Okay.
It's part of their financial inclusion efforts, reaching out to underserved communities.
Mm.
However, these types of loans can also be more vulnerable to economic shocks like a sudden downturn or a bad harvest because the borrowers might not have a lot of financial cushion to fall back on.
And I'm guessing that's precisely what they're anticipating. With this large provision,
Yeah.
that things might get a bit shaky for these borrowers.
Exactly. By setting aside this additional money, RBL Bank is essentially acknowledging a heightened risk of default within their JLG portfolio.
Okay.
They're being upfront about the fact that they expect some of these loans might not be repaid.
So how big of a deal is this really? What are the potential implications here?
Well, it definitely raises some questions in the short term. This provision is a hit to their profitability.
Yeah.
We're already seeing that in the lower net profit numbers.
Yeah.
But in the long term, it really depends on how things play out.
So it's like they're preparing for a potential storm, but we don't know how strong that storm will actually be.
That's a good analogy.
All right, we've covered a lot of ground here with RBL Bank's lending activities, both the ups and the downs.
Yeah.
But let's not forget about the other side of their business, their efforts to stay competitive in this increasingly digital world.
Right.
They're putting a lot of emphasis on their digital capabilities, throwing around impressive figures about processed files through e-sign platforms, API calls, partnerships, the whole 9 yards.
Mm-hmm.
But how does all of that actually translate into a better experience for their customers?
That's the key question, isn't it?
Right.
Because just having the technology isn't enough. What matters is how they're using it to provide real value to their customers.
Yeah.
Are they offering seamless online and mobile banking experiences?
Right.
Are they using data and analytics to personalize their services and provide tailored financial advice?
Uh-huh.
Are they making it easier for customers to manage their finances and achieve their financial goals? These are the things that will truly differentiate them in the digital space.
So are they genuinely a leader in this space, or are they just trying to keep up with the Joneses?
It's probably a bit of both. In today's world, a strong digital presence is non-negotiable for any bank.
Right.
But to truly stand out, they need to go beyond the basics. They need to be innovative and customer-centric in their approach to digital banking.
Mm-hmm.
So while those numbers about process files and partnerships might sound impressive, the real test is whether they're translating into tangible benefits for their customers.
I'm taking notes here. Customer centricity, innovation. Those are the key words for digital success.
Exactly.
Okay, one last piece of the puzzle before we move on, ESG, which stands for environmental, social, and governance factors.
Okay.
This has become a big focus for investors these days as people are increasingly looking at companies' sustainability practices and social impact.
Uh-huh.
RBL Bank, like many companies these days, is highlighting their efforts in areas like sustainable finance, financial inclusion, and corporate social responsibility.
Right.
They're talking the talk, but are they walking the walk?
That's the million-dollar question.
Yeah.
And it's not always easy to tell. We have to look beyond the headlines and dig deeper into their actual practices.
Give us an example of what that digging would look like.
Yeah.
What specific things should we be looking for?
Well, for starters, how much of their lending portfolio is actually directed towards sustainable projects like renewable energy or green infrastructure? Are they setting clear targets for reducing their own environmental impact? And are they transparently reporting their progress?
Uh-huh.
On the social side, are they genuinely promoting diversity and inclusion within their own organization? And are they taking steps to ensure that their products and services are accessible to a wide range of customers, including those from underserved communities? responsibilities. These are just a few of the things that can help us separate genuine ESG commitment from mere PR spin.
So it's not just about ticking boxes, it's about meaningful action and transparency.
Exactly.
Okay, so we've laid the groundwork here exploring RBL Bank's profit, dip, their loan portfolio, their digital push, and their foray into the world of ESG.
Yeah.
It's been a whirlwind tour, and I feel like we've uncovered some interesting insights already. But the big question remains, what does all of this mean for you, the listener, who's trying to make sense of this company and its future prospects?
Right, we've gathered all the pieces of the puzzle, but now we need to put them together and see what picture they paint, and that's what we'll do in the next part of our deep dive.
Sounds good.
All right. So let's distill some key takeaways from everything we've discussed.
Okay.
What are the things that really stand out to you from all of these financial documents?
Yeah.
And what should our listener be paying closest attention to?
Well, for me, it keeps coming back to that large provision for the JLG portfolio. It's like a flashing warning sign.
Yeah.
Even if the bank is trying to project optimism about their overall strategy, it just makes me wonder if those loans are really as risky as that provision suggests.
It's definitely a significant development, and it raises some important questions about their risk management practices and their exposure to potential economic headwinds.
Right.
You have to wonder if other banks with similar JLG portfolios might be facing the same challenges.
That's a good point. If RBL is seeing these warning signs, it's likely not an isolated incident. It could be indicative of broader trends in the microfinance sector.
Exactly. And for you, the listener, it highlights the importance of not just looking at a company's reported profits, but also digging deeper into the details of their financials to understand the underlying risks and potential vulnerabilities.
Okay, so that's one big takeaway. Pay close attention to the JLG portfolio and what it might signal about RBL Bank's future. What else should we be focusing on?
Their retail banking strategy is another key area to watch. RDL is clearly betting big on this segment. And on the surface, the growth numbers look impressive, but we need to understand what's driving that growth.
Yeah.
Are they maintaining their underwriting standards, ensuring they're lending responsibly, or are they loosening the reins to chase market share?
That's a crucial question, because aggressive growth can sometimes come at the expense of sound lending practices. It could set them up for problems down the road if they're not careful.
Precisely, we need to see if this retail-focused strategy translates into sustainable, profitable growth in the long run, or if it ends up creating more problems than it solves.
And what about their digital push? I'm still trying to figure out if they're truly differentiating themselves in a crowded space or if they're just playing catch-up.
It's a good question, and it's tough to answer definitively without a deeper understanding of their technology platform and the specific customer experiences they're offering.
Okay.
But one thing is clear, just adopting digital tools is no longer a competitive advantage. Banks need to go beyond offering basic online and mobile banking.
So what should they be focusing on instead?
Think about the things that would make you as a customer choose one bank over another in the digital world.
Okay.
Personalized experiences, seamless transactions, value-added services that make managing your finances easier and more efficient. That might mean leveraging AI-powered financial advice, offering hyper-personalized product recommendations, or creating integrated financial management tools that help customers achieve their financial goals.
So basically, they need to make banking feel less like a chore and more like a personalized service that's tailored to my individual needs.
Exactly. And that's a high bar to clear in today's digital landscape where customers have come to expect a certain level of convenience and personalization from every service they use.
All right. Challenge accepted, RBL Bank.
Right. The stakes are high.
Now let's circle back to that interesting shift we observed in their credit card portfolio, with more customers leaning towards purchase finance and personal loans on their cards.
Yeah.
What's your take on this? Is it a good thing for the bank, or could it backfire?
It's a complex issue with no easy answers. On the one hand, this trend could signal that customers are finding value in these financing options, which could mean more revenue for the bank. But on the other hand, it also raises some potential red flags. We need to think about the risks involved. Are customers taking on more debt than they can handle? Do they fully understand the interest rates and fees associated with these financing options? And perhaps, most importantly, is the bank properly assessing the creditworthiness of these borrowers to ensure they can actually repay the debt?
It's a valid concern. It could be a slippery slope if those borrowers start defaulting on those loans.
Precisely. It's a delicate balancing act for the bank. They need to find a way to capitalize on this trend without exposing themselves to undue risk.
Okay, so lots to think about there, potential upside for the bank, but also potential pitfalls if things aren't managed carefully.
Exactly. And that's the key theme that seems to be running through all of these financial documents. It's not a simple black and white picture. There are both reasons for optimism and reasons for caution.
It sounds like RBL Bank is at a crossroads, facing some tough challenges, but also pursuing some potentially promising strategies.
That's a great way to put it. And ultimately, whether they thrive or stumble will depend on their ability to navigate these challenges effectively and capitalize on the opportunities before them.
I'm sensing a theme here. Nuanced complexity. No easy answers. It seems like that's the reality of the financial world, isn't it?
Absolutely. And that's why it's so important to go beyond the headlines, beyond the surface level numbers, and really try to understand the nuances of a company's financial performance. Only then can you make informed decisions about whether to invest, divest, or simply observe from the sidelines.
Expert speaker. This has been a truly eye-opening deep dive. I feel like I have a much better grasp of what's going on with RBL Bank now, beyond just the numbers.
I'm glad to hear that. And remember, this is just the beginning of your research journey. There's always more to uncover, more perspectives to consider, more questions to ask.
So before we wrap up this episode, any final thoughts you want to leave our listener with, something to really make them think?
Well, you've really got me thinking about the broader implications of what we've uncovered here. RBL Bank's heavy focus on JLG loans and their efforts to reach underserved communities.
Yeah.
It makes me wonder about the future of financial inclusion in India.
Right. If RBL, a bank known for its commitment to financial inclusion, is seeing increased risk in its JLG portfolio, what does that mean for other institutions operating in this space? Are there systemic challenges that need to be addressed?
Right.
Is technology playing a role either as a solution or potentially exacerbating existing inequalities?
That's a fascinating question. If RBL is seeing these warning signs,
Yeah.
it's likely not an isolated incident.
Right.
It could be indicative of broader trends in the microfinance sector.
It's almost like RBL Bank's story is a microcosm of larger trends playing out in the Indian economy.
Yeah.
It makes you think about the role of government policies,
Yeah.
the impact of technological advancements, and the evolving needs and behaviors of consumers in these underserved markets.
Exactly. And for you, the listener, it highlights the interconnectedness of these issues. What happens in one corner of the financial world, even at a seemingly niche bank like RBL, can have ripple effects across the entire ecosystem.
It's a reminder that we can't just look at these things in isolation. We need to consider the bigger picture, the broader context, to truly understand what's going on and what it might mean for the future.
Couldn't agree more. It's all about connecting the dots.
Well, I think we've done a pretty good job of that today. We've taken a deep dive into RBL Bank's Q3FY25 results, sifting through the financial statements, the press releases, the investor presentations, even the auditor's review report. We've explored their profit dip, their loan portfolio, their digital strategy, their ESG initiatives, and even touched on the broader implications for financial inclusion in India.
It's been a comprehensive exploration, and hopefully you, the listener, are walking away with a much clearer understanding of RBL Bank and its position in the market.
I know, I always learn so much from these deep dives.
Me too. And that's the beauty of it, isn't it? There's always something new to discover, some new angle to explore.
Absolutely. So to our listener out there, we encourage you to keep digging, keep asking questions, keep learning. The world of finance is constantly evolving, and the more informed you are, the better equipped you'll be to navigate it.
And remember, if you ever find yourself overwhelmed by financial jargon or drowning in a sea of data, just send us your stack of documents. We're here to help you break it all down and make sense of it.
That's right. We'll be here ready to take another deep dive. Until next time, happy investing, everyone.